Hi, I'm Amir.
And I'm Owen.
We're the co-founders of the Generating Alpha podcast.
Today, we're thrilled to have on Steve Cohen, a very special guest.
Steve Cohen is widely regarded as one of the greatest Wall Street traders of all time. He's the founder and CEO of Point72 Asset Management, one of the largest and most respected hedge funds in the world.
Beyond finance, Steve is also a majority owner of the New York Mets and is known for being one of the best owners in sports today. He is a board member of the Robin Hood Foundation and is deeply involved with philanthropy in communities through the Stephen and Alexandra Cohen Foundation.
Steve is also an avid art collector, owning one of the most extensive and diverse private art collections in the world, featuring works by artists such as Monet and Picasso.
We're incredibly excited to share this conversation with you guys. And we hope you enjoy it as much as we will.
Thank you. Time, we really appreciate it. I'm Amir, in case you didn't know, and
I'm Owen, and also I've been a Mets fan for a long time.
All right, well, that's good to hear. Better than the
Yeah, I
alternative.
really like how you are developing the farm system and like signing big free agents.
What's that? What you say?
Like you're developing the farm system, like new like recruits like Luis Angel and Cunha and like other people and
Well,
like
we traded for those guys in
yeah,
2023, and
like Francisco Alvarez.
well, Alvarez was drafted a while back, but it's good that we have some prospects that are actually
yeah,
coming up and doing something.
if
So
it's okay, we'll just dive in because we want
Yeah,
to make
go
it
ahead.
this time. And again,
Sure.
we really appreciate you taking it. So going back all the way to your childhood, tell us a little bit about your childhood in Great Neck, Long Island, and how you grew up.
Yeah, I mean, listen, I grew up one of um, eight brothers and sisters. I mean, I have seven brothers and sisters, a total of eight. Um, Grew up in a nice area, you know, great place to grow up, Great Neck. Not dissimilar probably from Greenwich, from a standpoint of, nice suburbia. Um, I loved it, it was fun. And, there was no complaints in my childhood.
yeah. So you mentioned you have seven sisters and brothers. What was the atmosphere like and how has it like developed you as a person today?
Well, I mean, it's a little chaotic when in a small house, a lot of people running around, a lot of kids running around. So it was a little chaotic. Um, Probably helped me deal with chaos in the markets, right? Because I was so used to dealing with on a daily basis that sort of oblivious to it.
And we heard you're a big poker, but you're still a big poker player, but you were a big poker player in high school. And tell us a little bit about your poker experience in high school and what did poker teach you about human nature and what did it kind of carry over to trading?
Well, I don't play my, I don't play poker now, but I did play poker every day in high school. Um, I'll give you one little anecdote. We were playing poker at about 5:30 in the morning the day of my SATs. Like nobody cared. We were, no one cared about stuff like that. And so, listen, it really taught you how to take risk, right? Because I didn't have a lot of money in my pocket. I mean, I wasn't a rich kid, and so I had to win. And so that's pressure when you have to win. And so it teaches you how to take take probability bets, right? I mean, when you play, when do you fold, how do you raise, all that type of stuff. And so I think it's a great um, early educational experience on how to and not only that, how to deal with money. Like it became not about the money, it became about just making good probability bets, which is sort of what I do in the markets.
Yeah.
Yeah. So obviously you went to Wharton, one of the biggest business schools in the world. What are some lessons you learned at your time there?
Well, it's funny because I have tons of friends who graduated and I know what they were like there. So I can't take them serious today. So, yeah, listen, you met interesting people, people I've stayed in contact with to this day. Um, you're part of something, the best and brightest, so it forces you to work a little harder, perhaps, even though I think maybe I didn't work as looking back, I missed a lot of class. And basically what I did at Penn is I went down to the local brokerage firm every day and literally stood outside the local brokerage firm, no matter what the weather, and watched the tape. And eventually they invited me in because I was there every day. And I used to sit with the brokers, and I got a better education there than I did in school.
And like between your time playing poker and Wharton, when do you think you're kind of during Wharton, of course, you said you watched the tape every day, but between your time in high school and Wharton, where do you think your kind of love for the market started?
Well, it started before that. I started when I was 12, 13. There used to be like a CNBC similar program where you could watch stock prices move up and down. You can see the tape coming across. And I used to want to stay home from school and just watch it all day. And that was and I worked at a brokerage firm. I worked at a clothing store next to a brokerage firm, and so I could then run over and take a look at the stock quotes when I was 14. So this has been in my blood forever.
Yeah, really passionate. Let's move a little bit onto your career. So after school, if I'm correct, you went to Gruntle and Co.
Mm-hmm.
And then you started SAC. After you were at Gruntle and Co. and you decided to start SAC, were you scared to go out alone, or were you confident in your abilities? Because we heard you were really successful at Gruntle and Co. But what was your kind of feeling going out on your own?
Yeah, listen, I was ready. I mean, I had basically stayed at Gruntle for 14 years. And so I was 36 when I started my hedge fund. And frankly, I had outgrown Gruntle and Company, and they couldn't provide enough capital to where I wanted to grow to. And so I started my firm with 20 million in 1992. And today, the successor firm, Point72, we're running about 37 billion.
Wow, great to hear. So Point72 is a major hedge fund and what is it like differentiates them from other firms in the hedge fund industry, you would say?
Well, I think a lot of different hedge funds get lumped together, and I think they all have different strategies. And so, we're what they call multi-strat, where we have macro, we have quant, we have equities, we have credit, and so we cover a lot of different areas. I mean, you can be a hedge fund and be a single manager and just do equities or do quant. So I think everything gets lumped together, but there are lots of different strategies in the hedge fund business.
Yeah, and we understand that you stopped taking trades on your trading book recently, quite recently.
Yes, that's right.
And so right now, as you're still CEO and founder, what does your overall day-to-day consist of, very broadly?
Well, I mean, I sat in meetings all day today. There's a thing called running the firm. We have 3,200 employees all over the world. And frankly, that's the best use of my time. Trading, I'm good at it, but that didn't, when this firm gets this big, someone's got to manage it and get in the weeds. And so, not that I wasn't in the weeds before when I was trading, but it's better for the firm that I am actively managing the firm and not a book.
And we understand you have a multi-strat, and it's much harder to manage a multi-strat since you have many different verticals. Can you kind of, for our listeners, can you explain like what would the different in leadership skills need to be to develop a multi-strat rather than just one vertical like quant or macro or something like that?
Well, I'll give you an example. I was interviewing somebody who does European gas the other day. Okay, now if I was just doing equities, the interview would be if I was just doing equities as a hedge fund manager, tends to be pretty same questions all over and over again. When you're dealing with different strategies and different approaches, you have to really get into the particular strategy and the nuances of that strategy. And so it's a little bit more complicated. But in the end, what are you doing in all cases? You're taking risk. And then the question is, how do you manage that risk?
Yep. So what do you look for when you're trying to like hire an associate? I know that you're very high up and you might not do the hiring, but
No,
like
I do a lot of the hiring for
yeah.
people who run the money, not necessarily the analysts that work for them.
But what would you look for someone coming out of college, you would say?
You want someone passionate. We want someone, depending how old they are, like we have development programs. So how we would hire for the development program might be very different than how we hire for a senior analyst or a senior PM.
Yeah.
And so really it's a question of what they've done, how successful they've been, how passionate they are, have they managed people, do they have a specialty, their expertise in something as opposed to being a generalist. And we like sector expertise. Basically, are you good at something?
Yeah. And as you said, you have a lot of employees now. What core philosophy drives your culture and how has it evolved over time?
Yeah, listen, I think they tend to carry the principles that I hold. Culture is really important to me. I want a collaborative culture. I want a transparent culture. I want employees to feel like they can trust what we say, senior management, and I want a relationship with our people. I feel like it's a two-way deal. It's not like I give them capital, they give me performance. I feel like I owe them too. So I want to help them think about their career. I want to help them develop. I want to support them in the things they want to accomplish. And so, my door is always open. I have 3,200 employees, but if someone needs to talk to me, I'll make myself available.
Yeah. And you were talking about developing younger people, like looking for analysts. And we heard about Point72 Academy. So, of course, we
Yeah.
have a listener base. Tell us a little bit about Point72 Academy.
Yeah. I mean, we hire, this year we hired for 40 positions. We had 30,000 applicants. I mean, so really hard to get into. And so we're seeing the best and brightest across the world. And this is not just a US program, it's a worldwide program. And so, it's really about someone coming in out of undergraduate and we're teaching them the skills they need to be an analyst.
Yeah.
And the talent level that we're seeing is extraordinary.
And moving on to like a little bit of investing, how do you make decisions? Like, what is your decision-making process? And of course, overall.
I try to buy low and sell high. No, I'm kidding. Investing is really about probabilities, measuring your risk and reward, feeling confident in the work that's been done. I mean, we're a heavy fundamental shop. And so do I believe the work? If something was being pitched to me, I'd be asking a lot of questions about the idea and try to understand why this is a view that's not already reflected in the market price. So, I mean, those are some of the things I'd be thinking about.
So how does the worldwide economic outlook affect the way you invest?
In your outlook specifically.
Well, I mean, you can't ignore the macro. Okay.
Yeah.
I mean, whether it's the US economy or the world economy, that's ultimately going to reflect company earnings and company stock prices. Right. So if the world's going into recession, clearly, companies are going to have a tougher time. If things are expanding, they're going to do well. If there are new trends out there that companies can take advantage of, they're going to do well. If Russia invades Ukraine, well, guess what? The price of gas and the price of oil may change. That could affect lots of different things. So you constantly got to be monitoring the global macro and the U.S. macro because things are always dynamic.
And would you also say that for people who are like trade intraday, trade 1 hour, 10-minute, even for that?
Well, I think that there are plenty of quants that trade second by second. Okay, if you trade minute by minute, I mean, most of my fundamental discretionary equity, the guys that do the analytical work don't trade minute by minute. I mean, your transaction costs would kill you. I mean, getting in, getting out of the market is expensive.
And markets have become more and more efficient, although there are rises of traders who buy out of the money call options as soon as they hear AI. But as markets have become more and more efficient, there are fewer opportunities to exploit the inefficiencies. So,
well, I don't know if that's true. I mean, we had a phenomenal year last year. So how do you explain that if things were efficient?
So what do you think can be attributed to if the markets are getting less and less efficient? What do you think that can be
Well, I
attributed?
don't know if it's getting less efficient. I think the quality of our work is getting better.
There's tension between, since like the beginning of the stock market, between conviction and selling out of a losing trade. What is your opinion on conviction or selling out of a losing trade?
And how do you decide when to reverse course and write it out? What is your just like thought process on
I
it?
mean, listen, you got to keep processing information. You got to remember the way we do things. One stock is part of a bigger portfolio. So how it sits within the portfolio, you might have, let's say you own a stock and it's going down. You may have shorts against it, protecting you. We run long short. We don't necessarily just run long. And so there's a lot of components to that decision. Ultimately, if you're going through stock's not working for you and working against you some way, you got to recheck your work and make sure that you're not missing something. I mean, you can't know everything.
Yeah.
And so that gets to why isn't this working? Trying to figure it out. Try to understand why something is going against you. And you may want to add if you've done all the work and decide, hey, this is a great opportunity.
So how important is passion at like a company like Point72 or just hedge funds in general?
Well, what do you think the answer is?
I think it's a big one. I feel
Very
like
much so.
the more
Okay. If you don't enjoy what you do, you shouldn't be doing it.
Yeah.
Right? I mean, let's keep it simple.
And AI has been an up and comer.
I don't know how do you spell AI?
Probably an A and an I think.
Right. You're right.
What are your thoughts on AI and how do you think it'll affect the financial industry in the near future?
If you can automate stuff, especially the manual stuff, then they can do the higher value stuff. So that to me is a real efficiency tool. In addition, I think we create a lot of unique data, and how do we harness that? And through AI tools, you can imagine harnessing that data in ways that we're not doing today. And so that could create the opportunity to find new ways to be profitable that doesn't exist today.
Yeah. So let's move on to your more philanthropy and like how you give back to the community.
Okay.
So you obviously purchased the Mets, I think in 2020.
Yeah.
And how do you deal with being owner of a big franchise in the MLB?
Well, that's not philanthropy, right?
Yeah, you did say it was a civic responsibility.
It is a civic responsibility, so it is a little bit like philanthropy. I just wanted to make sure you caught that. Yeah. So you did your homework. So yeah, I mean, I said on my initial press conference, if I can make millions of people happy, wow, if we can win a World Series, that'd be fantastic. And so and that's my goal, and that's how I look at it. Like, I'm willing to lose money to support this effort. And I think we've done a great job in turning it around, but we still haven't won a championship.
Yeah. Hopefully.
Hopefully, right? Never know. Hope springs up. Every season you haven't, when you're 0-0, you haven't lost a game yet.
Yep.
And what would you say are some similarities and differences between running a hedge fund and running a sports team?
Well, I think there's a lot of similarities, right? You use analytics. We use analytics. You're trying to evaluate talent, we develop talent. What my farm system does the same thing. So yeah, there's a lot of commonalities there, and you're dealing with humans, right? So how do you get the best out of humans, right? How do you get the best out of your employees? Very similar.
Yeah, and especially I'd say for multi-strat because there's batters, there's pitchers, and there's macro, and there's quant. There's all these kinds of different players in the field. Go ahead.
So
now the cool thing would be if I had a pitcher that could do macro.
That would be very good. Maybe
wow.
Do it.
That would be
one or two lessons.
Yeah. Part-time Point72, part-time.
We'll talk about Ohtani having to, this would be even better.
Yeah. We'll make quants to learn how to pitch and do.
Exactly. Actually, I didn't want my quants to help out on analytics. Right. Yeah, I mean, you would think that would be good synergy. Yeah. They didn't really bite on that one, but I thought they would.
Yeah. They'll make a Moneyball part 2 about it.
Exactly. Totally.
So you have one of the biggest art collections, private art collections in the world. What inspired your love of art?
Yeah, I just, some of the people I worked with were art collectors, and so they go down and look at galleries and the auction houses. I started going with them and got hooked.
And do you mind? I like that painting behind you, the red one. Do you mind
Yeah.
telling me who's that by?
Well, yeah, that's what is that? What is that? That's I think it's God, now I'm embarrassed. I think it's an Ellsworth Kelly. Um, and is it Ellsworth Kelly? No, it's I forget. Okay, to be honest about it. But you know, it's very subtle. When you get close to it, you see different gradations of you know, it's all red and you know, it's very monotonish, but it shows you, you know, art can be right in your face or it can be very subtle.
Yeah, I like it. And I think both of our parents have taken us to a lot of museums in our youth. How important do you think art is in someone developing like us as education?
Well, I think what it does is it opens your eyes to different types of art. You know, makes you think about why the artist did what he did. There's always an historical context, and you know, I think history matters, and I think history matters whether it's in art, politics, the world, anything. And so, you know, you're learning about something. You're developing your eye, right? You're starting to, you know, the world isn't just about everything in your head. It's also about how you feel, what you respond to. And so that's what art is.
Yeah, and we'll move on a little bit to advice because we have a lot of listeners who'd love some advice for you from you.
Okay, just remember, didn't cost you anything. That's probably what it's worth.
Yeah, it's free advice.
Yeah.
Exactly.
So, who were some of your mentors or one of your mentors, and what were some valuable pieces of advice they gave you?
Yeah, it's funny. I didn't, God, I mean, I started when I was 21 at this firm. I had someone who hired me and they taught me the option business, but I had sort of had my own style. So I kind of created it myself.
Yeah.
And no one was really doing what I was doing. Now they started copying me at some point because it was pretty profitable. But I sort of, I mean, people have always traded the markets, but the way I was doing it was different.
Yeah. And we interviewed Jim Rogers last, and he also kind of he said the same thing. He said he couldn't remember any mentors, and I think there's a point to be made about that, about people who kind of blaze their own path.
Or have a vision, right? Or
Yeah,
something that they believe in, right? You want to talk about conviction, that's conviction.
Yeah.
And not to be swayed, because what I found is everywhere along the way, as I was growing my firm, people would say, what do you need it for? You're working too hard. You don't need to be any bigger. I mean, people just do not have the imagination,
Yeah.
you know, to create something. You know, some people do, but a lot of people don't. And so it's very easy to get talked out of something you feel passionate about.
Yeah, and I think I see that a lot in today's world. Some people aren't willing to reach out to Steve Cohen to ask him to come on to be the podcast. And
yeah, I mean, you know, look how easy that was, you know.
so
I just hope before you know it, this will get out there, and I'm going to be jammed with requests.
Yeah. So, what is one piece of advice you can give to high schoolers today?
I mean, follow your passion. I mean, you got to love what you do. If you love what you do, it's not work.
Jim Rogers also said that in our last podcast. He's like,
really? So maybe I'm copying him.
Agriculture.
Maybe I saw the podcast. Maybe that's what it was.
Yeah, Jim Rogers is probably your mentor. He didn't even know.
I didn't know it till now.
Yeah, and also, yeah, the head of equities at Bridgewater that we interviewed also, he was former, but he also said that too. I think it's
well, you know, if 3 people say it,
yeah,
probably that's close to true.
You should rename it the Passion Podcast.
You know something? Passion matters. It really does.
And what is one question you rarely get asked that you think you should be?
Wow. I don't know. I mean, why do you keep doing what you're doing? I always ask because I like it, because it's fun.
Yeah.
Yeah.
Well, that's kind of the end of our.
That's it? That's all you got?
That's all we got.
Yeah.
Wow. Geez, that's it.
Yeah.
No, I'm kidding.
Yeah, we got you out right on time.
Yeah.
Yeah, that's good. I love it. Beautiful.
We
All
respect
right.
that.
Yeah.
You kept your word. I appreciate it.
Thank you. Thank you
Thank
very
you
much
a
for
lot.
coming on the
All right.
podcast,
All
Steve.
right. All right.
Please get a World Series.
What's that?
Please get at the Mets a World Series.
Yeah, no pressure, right? I
Yeah,
got
no
it.
pressure.
Okay. All right. Good enough. See you guys.
All right.
Thank you very much.
Bye.
Bye.